sometimes you'll look at a balance sheet and your accounts receivable will be negative. And it's that definitely shouldn't be negative. Or you'll look at some asset accounts that will be negative, or even liability accounts that will be negative. And so what that's indicative of is that the transactions that are affecting those accounts on the balance sheets, they're not necessarily being handled correctly. Say, for instance, if you have a negative accounts receivable, well, that means you're receiving payments out of accounts receivable, but you're not putting invoices into accounts receivable. So you're not putting into accounts receivable, but you're taking out for some reason. Or on the liability side, your accounts payable. If you have a negative accounts payable, that means you're paying bills out of accounts payable, but you're not putting those bills into accounts payable. And those are two common issues that we see. We even see companies that they run a balance sheet and they have negative numbers in their bank accounts. And what that means is that you're taking out of the bank account, but your deposits aren't getting recorded. So that's usually a red flag. And it's very, very common that we see that, just simply because everybody's doing most of their accounting for what's on the income statement because they want to see what the profit is, but they tend to neglect the balance sheet. So that's really the number one thing that we see.